Actually, I think the number is not as bad as we anticipated by the market, and this is really in line with our BNP Paribas rates view, because actually we anticipate a very slow cooling down of the Chinese economy, and actually this figure is really in line with our expectation, and we think this kind of trend will carry on actually for the remaining year and also for 2019.
How much weaker do we go from here if you're talking about a trend that continues moving into next year? I mean, do we expect to see 6.4% next quarter and then continuing to move towards the 6% mark over the course of 2019?
Yeah. Actually, for the official figure, I think actually the 6.5 for this quarter is really fine. And I think if it's a very slow cooling down for the 2019, there will be some figure close to 6.3 or something. The pace will be very slow. It will not be really like a drop, like suddenly go to a 6%. I think this kind of possibility is quite low.
Okay, we were just talking to a guest earlier on about the situation in China economically, where the growth is going to come from, where it's continuing to come from. Calvin Tay was really very optimistic about the consumer in China. You know, he's talking about the retail sales figures which beat expectations, but also talking about consumers in general and saying that there is no real wealth effect in China. The fact that we're seeing downside on the stock market and problems with trade has not yet impacted the Chinese consumer, and that's going to help support growth going forward. Is that a view that you agree with?
Yeah. Actually, from our view, we think like the most important factor now is really the real estate market in the sense of real economy, because actually now we see that the housing price is really high and the central government has really a willingness to bring it down. So actually this will of course discourage people to invest into this market from the point of view of developers. And so actually for the fixed asset investment, there will be always some pressure for going down. So this is actually something that I really take seriously when I think about my interest rate strategy. And actually I think for the consumption part, but because of the tax cut and this kind of things, and also like people have more confidence about buying houses, apartments with the drop of the housing price, actually this part I think will be sustained. So I'm not really particularly worried about the consumption, but for the FAI, the real estate investment is really something that I really care about.
Still watching? Perfect. Click here to watch another great video from CNBC International. Oh, and don't forget to subscribe. Thanks for watching.